Stock market investors, what is going on? My name is Jason. In today's episode, I want to give you the number one stock that I'm buying right now. Not only is it one of my favorite stocks in the entire stock market that I think is tremendously undervalued, it's also one of Warren Buffett's newest positions that he continues to accumulate quarter after quarter. All right, let's get into it. All right, investors, take a look at your screen right now. This website is Whale Wisdom. It's one of my favorite resources for stocks across the entire market. So what this website does, it compiles all the stocks owned by some of the biggest companies in the world, the biggest hedge funds like Berkshire Hathaway, right? That is a huge company run by Warren Buffett. And if you take a look at changes in shares, the number one stock that Warren Buffett and his company are buying right now is Sirius Radio. SIRI, that is the ticker symbol. He currently owns a buttload of shares, 13 million shares Berkshire Hathaway owns, and he owns around 3.5% of the total company, right? Okay, so the estimated price that he bought in was around $36. And guess what, guys? Sirius Radio is now going through this weird process where they had all these different types of shares, and now they're all combined under the Siri ticker, right? And we've seen a recent sell-off as of late, and the stock price is around $25 now. So we're getting a considerable discount from where Warren Buffett and Berkshire Hathaway was buying these shares at. All right, guys, I'm just going to show you that I put my money where my mouth is. Over the last 2 weeks, I bought several different times at different prices, right? And this is a cover call that I sold at the $35 call for $21 I got for January 17th of next year. But you saw I bought a little bit at 26, 25, and then as the price shot down, I bought more and more and more. I added around 200 shares at a price average around $24 over the last 2 weeks. I already own about 100 shares, so I currently own 300 shares of Sirius Radio, and I'm continuing to build out this position, right? So let's take a look at this company, right? The shares are trading around $25. Year to date, they're getting obliterated, down 54%, which is crazy because nothing really bad is happening with the company, right? The high was around $54 a share, so we're getting a considerable discount. And Warren Buffett buying in the mid-30s also saw a ridiculous discount for what this company is actually worth. All right, let's move over to Yahoo Finance real quick, where we can see they're paying around $1 per share annually, about 4.4% dividend, which is also great. The one-year target estimate is at $34. That's a $10 increase from where we're at right now. Look at this, guys. Earnings per share, trailing 12 months, $3.30. So they're only paying out $1 in dividends, right? That's well below the 50% threshold that I look for in my dividend stocks, right? And look at this ridiculous PE ratio, guys. 7.56. You gotta be kidding me, man. The S&P 500 is trading around 20 right now. This stock could literally go to $75 and still be trading less than what the current S&P 500 is trading at right now. I just absolutely love where this stock is trading at, guys. I am really, really excited about this company. And if you look, the forward PE is even less than the trailing PE. So they expect earnings to continue to go up, guys. It's great. And look, the last 4 quarters earnings per share, they beat every single quarter. They're consistently beating Wall Street estimates. Like, what else could you ask for, right? So out of all the analysts, recommending this stock, 8 are recommending hold, 4 are buy, 4 are strong buy. I am just thrilled with where this company can potentially go. So let's dive a little bit deeper into some of the financials of this company. I like going over to Google Finance where I can really see, I'm a visual learner, like what this company is doing, right? Man, I still can't believe the stock is down 54% and they continue to beat earnings quarter after quarter after quarter. I like that 4% dividend yield as well while you wait for this stock to appreciate, right? quarterly income, it's pretty flat, right? And that's probably why the sell-off. But the bottom line, this is a consistent money-making business, right? Over $300 million in net income pretty much every quarter except for one over the last 5 quarters, right? The revenue is slightly down, but $2 billion is absolutely crazy. Their operating expenses are actually down year over year, which is great. Net income is up 2%, net profit margin up 5%. I love where this company is at right now. And this is like where it gets really interesting. Cash and short-term investments up 96%, total assets up 10%, and liabilities not even up 1%. I just think this company is significantly undervalued, guys. And if we look at an annual basis, we're seeing an increase in top-line revenue. It was a little flat from 2022 to 2023, but I expect a re-acceleration in those numbers in the coming year. So cash flow was down a lot in 22, but bam, we jumped back up huge in 2023, right? Moving in the right direction. Cash from financing up 35%, net income up 3%. Cash is down a little bit from investing, but that's because I think they're putting the money back into the company, right? And then net change in cash up 220%. I absolutely love that. But the price to earnings ratio at a 7.45, right? This isn't a company that's going to grow 30, 40%, right? But I think easily over the next 2 to 5 years, we can see 20% growth year after year and still collect a 4% dividend. That's why Warren Buffett is buying this stock, and that's why I'm buying this stock. Look, historical earnings, we're just beating Wall Street estimates over and over and over consistently. I absolutely love this company. And if we compare this to some of the other media companies, this is by far the price to earnings ratio is great at 7. Other ones are 13, 33. Earnings per share growth almost 8% a year. And the best, net profit margin 15%, better than all of these competitors, guys. I absolutely love it. The overview is great. The valuation is right where we want it to be as well. I'm really, really excited about this company. EPS growth 8%. I'm cool with that. The dividend is right where we want it to be. Profitability, gross profit margin percent, 53%. Really, really top of the class in my opinion, guys. So a lot of analysts are saying hold these shares, but I was buying at 23. We're already at 25. And if we just get back to where we were trading at earlier in the year, there are going to be considerable gains for us, guys. I don't see this company going away. I think radio and podcasting are here to stay. And I look for Sirius Radio to really start bringing in some talent like podcasters to kind of boost up their rep a little bit. I really like this company. I think there are gains to be had in this company, and so does Berkshire Hathaway, right? They've upped their stake by 262%. They currently own 3.5% of the company, and they were buying in the mid-30s. We're in the mid-20s right now, man. But if we just get back to where Warren Buffett was buying in the mid-30s, that's like a 30% gain for us, guys. I really love this company. I definitely think there's room for it to grow and grow 5 to 10% year after year. Get that stock price back up to the PE ratio around 14. And that's a double up from where we're at right now. This stock, in my opinion, is valued around $50 per share, and it's only trading at 25 right now. There are some great gains for us in the future if we just stick it out. I love Sirius Radio. Let me know in the comments below. Do you think I'm crazy? Do you think I found a diamond in the rough? Just like Warren Buffett. Buffett doesn't like the big, shiny, sexy stocks. He looks for undervalued assets that generate free cash flow, and that is exactly what Sirius Radio is, and that's why I'm an investor in this company. Don't forget to like and subscribe. We'll catch you guys on the next video. Peace.